Hey, everybody. Good morning. Welcome to our partner webinar series this morning. Thank you for joining us bright and early on a sunny Thursday morning. Hope everybody's doing well. Just wanted to give you a few items up front as we begin today. For those of you that haven't checked out our new website yet, tarrantfinancial.com, please go take a look at that and see our new name, new look, new website, and let us know some feedback on that. Hopefully you'll like that as much as we do. Long-term care is a hot topic these days. It's been one of our most requested topics when we surveyed our clientele several months ago. So we're very happy to bring this to you today. A little diversion from the usual investment theme that we have. Odds are you know someone who has been through long-term care or have helped care for a loved member of your family, and you know firsthand how expensive and challenging care can be. Not to mention the emotional toll that watching a loved one deteriorate can take. With costs skyrocketing and our population aging, making a plan for care has become one of the top priorities of a sound financial plan. We all desire dignified care, and as much as possible that our family stays our family and not our full-time caregivers. Plus, most people want to protect their income and their assets for future generations or for causes that they care deeply about. So with that in mind, we're excited to bring our guest speaker today, Richelle Collazo. She's regional director for OneAmerica, one of our primary long-term care insurance providers, to discuss the myths of long-term care. And hopefully we can debunk some of those and give you some good information for making sound financial decisions. Richelle has been a long-term care planning professional since way back in 2005 when she was a teenager. She started her career with GE Financial as an agent, and she was awarded Rookie of the Year and a multi-year qualifier for long-term care production. In 2011, she started her own practice, independently wholesaling to the area's top agents as their go-to resource. Her experience in long-term care is very diverse, and she's been a successful producer, partner, and wholesaler with several companies, GE, Genworth, Guardian, and now OneAmerica, since 2016. We work with her on case design quite extensively, and when we have issues that we need to deal with, she can step in and help us with that as well. So we're happy to bring Richelle to you. She is a resident of Fort Mill, South Carolina, travels all over the Southeast, and will walk us through the myths of long-term care. Couple of operational notes. If you have questions, remember to put those in the chat at the bottom of your screen, and Charlie will make sure we get those answered. This session is being recorded, so if you want to listen to it, we'll be able to post it on the website so you can listen to it again and distribute that to your friends and family. So with that, Richelle, we turn it over to you. Thank you.
Thank you so much, and good morning, everyone. And thanks for getting up a little early and joining us for such a fun topic like long-term care planning. But I promise that by the time we're done here today, you'll feel good about knowing a little more about the issue and how it might pertain to you personally, and what kind of a solution you might want to check out with Mike. Okay, so let's get started. What I love to do is start with talking about the myths, because there are so many myths when it comes to long-term care planning. I think that's the best way to frame the need. So most people will need long-term care services at some point in their life. Is that a myth or a fact? The cost of care is rising. So there's a lot of things that we're going to dispel. It's time to set the record straight. So let's dig right in. There are 7 myths, by the way. Myth number 1, a government program will take care of me. Now, I'll pose this to Mike and Charlie. Have either one of you ever had an experience where someone that you've cared about has had some kind of a health change where they couldn't do for themselves anymore? Maybe they were in an accident or got some kind of major illness, or later in life got older and frail and forgetful and needed either some home care folks to come in or family members to help out, or go to an assisted living or a nursing home. Have either one of you had an experience like that?
Yeah, absolutely. Yep.
And Mike, do you mind if I tell me a little bit more about that?
Yeah, sure. No, happy to do that. One of my uncles actually has gone through that. He is in his late 60s. Sorry, he's in his early 70s. and contracted a staph infection at the hospital and became paralyzed from the waist down because
Oh
of that
my
staph
goodness.
infection. And he has had to go through, he's had to move out of his house and now lives full time in a nursing home, although he does not need nursing type care. But he had to go through all the rehab. He's able to walk now, which is amazing. It's kind of a miracle, honestly, but he really can't live in a house by himself.
Wow.
Yep.
That's really that's rough.
Yep. Yep.
Now, um how did government programs help in that scenario?
He is a veteran, and it took a good amount of effort to get the VA benefits, but he has finally been able to land that plane. But it took a couple of years to get him set up.
Okay. And when someone's a veteran, and this is my understanding, but correct me if I'm wrong. So there's some great veterans benefits, especially for nursing home care. If he would have been able to live on his own or live at home with assistance, you don't quite get as much great care and the family has to step in more. With nursing home, you do get covered really well depending on your priority as a veteran. But they also take income into account. So usually your income
Mhm.
has to go toward the cost of care. Is that true for your uncle?
It is.
Okay. So a lot of people think it's just free. And the beautiful thing is, it's much better for veterans than it is for most, as long as you have that priority backing you up. But it's still not free, but you are in a better situation with something like that. So the government programs are Medicaid, Medicare, Veteran Services. A lot of people confuse Medicare and Medicaid. So Medicaid is a welfare system that helps folks that don't have the resources to pay for their own care. And so basically, if you have some assets, you have to spend them down to be eligible for Medicaid. And so most of us are trying to avoid going broke. So it's
Mm.
usually not the option we're planning for. Medicare is your insurance that you have when you're 65 or older through the government, and it does a great job, in my opinion, of paying medical expenses. I have a friend who recently retired, a peer of mine, and he's like, wow, I'm so pleasantly surprised. It's easier to use Medicare than it was our health insurance. There's no major deductible because I have my advantage or my supplement. So Medicare does a great job with medical expenses, but it's a lot like your health insurance in that it covers the medical need, but not to the long-term care need. For instance, if God forbid you had a stroke and you had to go into the hospital, um, you're going to get your Medicare is going to cover that nicely. When you get released from the hospital, and this is true for your health insurance also, when you get released from the hospital, as long as you were there for a qualifying stay, which means you were admitted for at least 72 hours, and then you need care within those first 30 days, Medicare will cover some of it at home. If it's home care that you need, they'll say, oh, 3 days a week, 4 hours at a time is what we can give you. That's really standard for them. But then once you stabilize, once the physical therapy has stopped, there's no more medical need. So even if you didn't get all better and you can't be independent, you're totally on your own. If you did have to go into a nursing home on Medicare, the most they'll pay is that first 100 days. Most people get about 27 days from Medicare, and then they're totally on their own. So, Medicare works a lot like the health insurance. When you have a medical need, it's a great thing, but that's very different than needing long term care. Um, and as far as the in the top three reasons why people need to use long term care is for cognitive issues like Alzheimer's and dementia. Well, guess what? There's not a medical need there. So you get very little, if any, help at all from Medicare, and you're all just on your own. So you have to qualify. Government programs, usually people don't wind up saying, wow, that government program really took care of, my mom and dad until the day they died. We didn't have to be stressed or spend down our money. So a government program really isn't something you can rely on, unfortunately, but I think most of us know that. Now, myth number two, I can save the money I'll need for long term care services. You know, we get that a lot. I'm in the long term care insurance business. So sometimes people will say, why wouldn't I just put money aside and self-fund and I can invest my money and then just use that bucket? The problem is two things. One, we don't know how long we'll need care. Like with Mike's uncle, that was so out of the blue, right? I mean,
Mm.
who expected anything like that? It's not something you plan for. Long-term care services can be very expensive. And a big problem is the cost of long-term care. People love to ask me that question. Well, what's the average cost of care? And I love to say, well, if I'm standing in a bucket of ice water and my hair is on fire, my average temperature is pretty comfortable. So that's kind of a silly image, but it's tough to talk averages because this isn't in this situation. Don't you want to be below average instead of above average as far as how long will you need care? At what point in your life will you need care? Will you be 60 years old or will you be 85 years old? And doesn't that mean something different to your financial stability? If you're married, will both of you need care or just one? Might both of you need care at the same time? And for how long? So it's really tough to plan. Now, when you think about maybe I can just save the money for long term care services, that used to be a more appealing option back in the day when we just had traditional long term care insurance. Now, traditional long term care insurance is something that a lot of your friends or your parents probably have or had. And it wasn't a bad option at the time, but it's more like renting a home. Now, when you have a hybrid or an asset based long term care policy, those have become so much more popular because it's like owning a home. So when you rent a home, and sometimes it's the right move to rent a home, it's never one size fits all. And that's why you have someone like Mike to help figure out which solution makes sense. But with the older traditional that you've probably heard a lot about from friends and family members, it's like renting. You know how your rent, that can change. Your landlord can raise the rent. Well, the same is true for traditional long-term care. When you move out of your apartment or home that you're renting, you don't get a check for all of the deposits that you've made over the years, all the rent you've paid. You're just moving. There's no asset. When you pass away, there's nothing to leave behind when you rented a home. So that's like traditional long-term care insurance. But it can be a little less expensive to rent than own. So it just depends on the situation and what you're looking for. When you have an asset based long term care plan, that's more like owning a home. It's still your asset. The premiums are guaranteed, they can never go up. Um, and the benefits are guaranteed. But what's really interesting about those products is if you're lucky enough to never need long term care, there's a death benefit for your beneficiaries. So there's different products out there, and Mike has access to them all. With the company that I work with, they offer a joint second to die contract. So if you have a spouse and neither one of you ever needed care, then after you're both gone, you're leaving that money behind. So it's not a use it or lose it. So the whole I'll save my money for long-term care doesn't make as much sense anymore because of these products that guarantee you're never throwing money away. And we're the only carrier that has a lifetime benefit. So you don't need a crystal ball to know, well, how much do I need to set aside if I'm going to save to make sure I'll have enough for long-term care? Doesn't matter because you can have lifetime benefit with a long-term care insurance policy. So it's a nice thought, but it's not really as necessary as it was before now with these hybrid or asset-based plans. This one's important. Only old people need long-term care services. Among adults age 65 and older, about 70% will need some help with the activities of daily living as they age. Now, the younger you are and the healthier you are, the better your options when it comes to long term care protection. It's one of those things where when I used to sell long term care insurance directly to consumers, if my phone rang and someone was begging to meet with me as soon as possible, all of a sudden I knew maybe this person has recently got some kind of scary diagnosis or had a health change. it's that you can use this at any time in your life, but the key is that you need to get ahead of it and look into it when you're younger. The only time you're really going to be super motivated is after you might have had a health change and then there aren't great options available. But 40% of people needing long-term care are under the age of 65. We talked about this a bit when I mentioned the government programs. Another myth is I don't need separate long-term care protection because I have health insurance. I mean, Mike's uncle, he wasn't lucky in what happened to him, but he was certainly lucky that he was a veteran. And I shouldn't even say that because I'm grateful for his service. We're lucky that there's folks like him that want to serve our country. But um, he probably didn't realize he was planning ahead for long-term care as well as he did because it was just part of the package he got that he well deserved. But for most of us, the health insurance does not cover the long-term care. Just as I mentioned earlier, it just helps a little bit in the beginning. Myth number 5. This is so important. When people think long-term care, they think nursing homes. Long-term care protection pays for nursing home care only. That's kind of the biggest myth that I really want to dispel today. The thing I love most about long-term care protection is whenever possible, and it's not always possible, but often it is, whenever possible, someone whenever possible, a long-term care policy will help you stay at home. Did you know that most people receiving long-term care services never see the inside of a nursing home? But often when people say, "Oh, tell me about long-term care," they think of that family member that's in a nursing home. That's why when I pose the question, have you ever known someone who's had some kind of a health change, whether it be at home or in assisted living or nursing home, it really opens your mind. Now, this might not make me sound like the sharpest tool in the shed, but when I started in the long-term care space back in 2005, I had a manager and he'd say, "Everyone in this room has had an experience with long-term care." And I'd think, no, I really haven't. My family, none of us have gone to a nursing home. Well, a bunch of months into the business, I realized when my grandmother was sick, she came in and she moved in with us. And I was in high school at the time. So I was the first one home in the day. I got home the earliest. And I'm the one that helped my grandmother get in the shower. But when family takes care of family, we never call it long-term care. So really, any time in a family member's life where they've needed help from someone else, that's long-term care. And so most people say, I really do want to stay at home if possible. But you only want to stay at home if you can get the help and care that you need. I mean, and I keep going back to Mike's uncle, but Mike, didn't you say it's not highly skilled care that your uncle needs,
Mhm.
but he just can't live at home? You,
Right.
when
Yeah.
you have a long-term care plan, um, and instantly you have this support from day one, it makes all the difference in the world. Not sure if you've visited nursing homes or folks on the call, but if you ever do, number one, you notice it's mostly women in there because women outlive their husbands. But number two, you notice it's not people, hooked up to all these machines needing sophisticated medical attention. What typically happens is the family wasn't prepared and they were so overwhelmed. I have a client once whose dad was, a practicing physician until the day his health changed, and then it was sudden, and he needed help. And his daughter called me up and said, "I can't believe I'm going to say this." They lived, I was from New York at the time, and they lived on this beautiful piece of property. And the main house was dad and mom's house. And then further away on the property, the daughter lived in a separate home right on the property. You would think that would be kind of easy for her to help take care of them, right? Well, she was also a physician. And she said, I'm afraid if I keep dad home, I'll make him worse. Now, she had the skills as a doctor, but she didn't have the skills of a home health aide to know how to lift him. And she also had a career that she couldn't give up to take care of him 24/7. And also, it's kind of uncomfortable to do some of those things for your parent. So, instantly, because she had the long-term care policy, she had help and infrastructure and support around her from day one. What most people underestimate is that the help and the care you get, it's the toughest time in your life. So if Mike or Charlie, if their loved one had a health change today or tomorrow, it wouldn't be so tough for them to just figure it out a little bit. But the problem is we're growing older together. And when it happens directly to the person you love, you want to be their support system. So some of these policies, and not all of them, in fact, not most of them, but some of them offer this amazing infrastructure. There's a call center with OneAmerica, and you get assigned one benefits person to hold your hand through the process. They'll help you hire home health aides. They'll reach out to local agencies to see who have plenty of home health aides at the skill set that you need for your situation. They check on you at least once a month over the phone, will help build a plan of care, work directly with your doctor's office. So at the hardest time of your life, not only do you have the funding that a policy pays, but you also have the support that you need to give you a better shot at being able to stay at home. Myth number 6, I can't afford long-term care insurance. A lot of folks, if I just poll people and say, hey, what have you heard about long-term care insurance? Some folks will say, I've heard it's expensive. Well, it can be, but it doesn't have to be. So the great thing about working with your financial advisor is you'd build a plan. If a plan makes sense for you, you'd build a plan that fits into the budget. It's just like life insurance. Some people want to have enough money so that, when I die, I want to make sure my funeral and my burial expenses are covered and I don't burden anybody else with that. But I'm not really that concerned about leaving money behind. Some people are saying, hey, I want to make my heirs wealthy. Most people are somewhere in the middle. And so that's the beauty of a long term care plan. One person might have a long term care benefit that pays out $2,000 a month to give them some nice home care, take the sting off. But someone might say, I really would hate it if any of my money had to pay for care. Show me a benefit of $8,000 a month. And most people fall somewhere in between. There's no right or wrong. It's a matter of working with your advisor and making sure the benefit will work for you the day you have a health change. And most importantly, the cost of the premium will make sense. In today's market, you can, write one check and be one and done when it comes to paying for long-term care, or you can use qualified money, or you can just pay over time and say, hey, show me the lowest premium every year out of pocket. I want a lower premium. I don't need a shortened payment period. So there's so much flexibility to make something fit within a budget. And our last myth, we don't need long-term care protection because we have each other. Hey, Mike and Charlie, are you guys growing older at the same pace or what?
I'll go with probably not. I'm probably growing over a little faster than Charlie.
Yeah, I heard this. I was flipping the channels and I heard Dr. Phil say, as I was flipping, as you age more rapidly. I'm like, well, that's no fun.
Yeah,
Um,
thanks, Dr.
but
Phil.
yeah, exactly. That's why I kept flipping the channel.
Yeah, right.
But but it's interesting because when I used to sell to consumers, I'd sit across from this lovely couple and married 30 years and still liked each other kind of situation. And they said, "Oh, we're just looking into this, but we're going to take care of each other." And let's say they're 55 years old, 60 years old. I be a bit of a wise guy because I was from New York and New Jersey. It's kind of a requirement there. But I'd say, okay, so you're both healthy. You have no health issues to speak of, except for a little, high blood pressure, whatever, but pretty healthy. Now, I'd say, Mr. Jones, do me a favor, gently fall onto the floor and kind of play dead horse, And then, Mrs. Jones, can you lift him up and put him back in the chair? And so I know you want to be each other's plan, but what if you can just care for and about each other and you can hire someone to do the heavy lifting? Because there's an expression in my business that's so true. And I bet you've seen this in your own world, in your own neighborhood, where caring for the chronically ill can make someone chronically ill. Have you ever seen the wife taking care of her husband and you see him pushing him down the street in the wheelchair on a lovely day, taking a walk? All of a sudden, you see um, her health changing because it's just so rough to do it on your own. So if you're in this lovely situation where you want to take care of each other, or your kids are willing to take care of you, it's nice to lift some of the burden of that heavy lifting off of their shoulders to put a plan in place for that. And those are all the different things that come into play to see if you need a plan or not. Sometimes folks say, "Oh, my kids are great. My daughter already built the house and there's a mother daughter, there's a spot there ready for me," which is really lovely. That's great. Then we don't need to build a large plan because it's not 24/7 care you'll probably need. You're with your daughter, but maybe she'll want to go to your granddaughter's ballet recital or your grandson's little league game, and someone needs to come in and do that kind of thing so that it's not all on her. That sandwich generation is very true, and everybody can understand that, right?
Right.
So those are the myths of long-term care. I think, we set the record straight and we debunked some myths, along the way. Are there any questions?
Yeah, we'll give
While
you all a
you're
minute
thinking,
to type those into the chat there.
yeah, and I was going to say, while they're thinking of questions, if they have any, um, the one thing I would recommend is you're never, in most cases, not all, usually you're more healthy today than you're going to be in the future. It's always good to be in the driver's seat. So my recommendation is sit down with Mike and see if a long-term care plan makes sense. And guess what? Because you want to ask yourself, what are my expectations? If I have a health change, what's my current plan? What are my expectations of the people that I love? And financially, how would I fund it if I needed to pay for some care? And so either you transfer the risk to a long-term care policy, or you stay in the situation where you self-fund, but you build a plan to say, okay, if something happens and it costs me $3,000 to $7,000 a month for care, how would I want Mike to tackle that with me? And so at least you have some kind of a plan.
Yeah, Rochelle, you brought a lot to mind. As you were going through the seven myths here, and I really appreciate that. I'll go straight to one of the concerns that I hear quite often from clients. They may have experience with a family member where a company, denied a claim. If there's a myth number 8, it's probably that companies tried to deny claims. So can you kind of speak to what qualifies for a claim and how companies work that out with an insured?
That's a great question. It's another reason why you want to get ahead of putting a plan in place and doing it while you're healthier, because you want to be in the driver's seat and you want a long-term care plan with a company that has a great track record for paying claims, not one that took on a lot of extra risk. Because, hold on one second, I had to clear my throat a second. I didn't think y'all needed to listen to that. Okay. So that's a great question. And first, you want to be in the driver's seat. You want to go with a company that can be careful when they're having applicants come in. Some companies will take on a lot of risk, and their claims departments aren't always run as seamlessly. But what's important to know is, in order to access a long-term care benefit, your doctor has to say that you need help with 2 of the 6 activities of daily living for at least 90 days, or have a cognitive impairment. The activities of daily living are basically everything we did when we got out of bed this morning. From getting out of bed, they call that transferring, to bathing, dressing, eating, toileting, and continence. If you need help with two of the six for at least 90 days, you can use your policy, or if you have a cognitive impairment. That criteria was set up by the federal government because these are tax qualified plans. The nice thing, and listen, One America is not the only great solution in town. It's just the one I can speak to. I've worked with all of the companies, but it's the one that I work for today. Mike's going to have different options available to you as well. But the one thing I like about One America is it's a mutual company. We're not owned by Wall Street. We're not traded publicly on the stock exchange. When you're a mutual company, it means your policy holders are your owners. So for that reason, we do an amazing job of paying claims, because here's the thing: we know we're paying a claim for you. If you have a hybrid or an asset-based policy and you buy that policy, I can guarantee you're going to make a claim. Either it's
Mhm.
going to be a long-term care claim or a death claim. So the old traditional worked a little differently. It was, if you don't use it, you lose it. Well, with the hybrid plans, you get money no matter what. So they're paying out one way or the other, but you want a company that has a great reputation.
So I guess when it goes to filing for claims and whatnot, it's best to probably file early and not, wait. Now, I guess I'll give you a story. We were working with the client last year about this with a different carrier. She'd had her policy for a long time and was finally needing some what I would call home health care, or more like home health assistance. And they kind of paid for this on their own for about 6 or 7 months, and then contacted us and asked, how would our policy pay for that? And I reminded them that it was actually covered by their policy. They'd included home health care as one of the benefits in their policy. Thankfully, the company looked back and counted all that prior care toward their deductible or their elimination period. But my advice realistically would be that the minute that you think you need care or need assistance, go see your doctor about that, so you can see if you qualify for those 2 out of 6 activities of daily living, and go ahead and get with the company on that, because the worst thing they can say is no, not yet. But likely they're going to say, well, here's the qualifications, here's what you need to do, and kind of walk you through that. But thankfully, in that case, they were able to retroactively look back at the care that they'd already paid for.
Yeah, absolutely. And with the better companies will do that.
Mm-hmm.
I had a situation recently where someone had a stroke. So it was very, instantaneous. They didn't explain to their kids how the policy worked. They called me, or they called their agent. They brought me in 7 months later, and I said, "Well, the what's been happening the last 7 months?" "Oh, well, we've been doing home care, but it's getting tough, and we're putting mom and dad both together in assisted living."
Yeah.
And so, same thing, because it was easy to figure out, okay, there was a stroke. Obviously, this person needed care, even though we didn't get any information at the time, and they paid back claims. So I think for the better companies, the companies have to report to the insurance department and the government how many claims they're declining. They
Mm-hmm.
don't like to decline claims. But if you're a company that isn't really that concerned about your reputation, you're not going to care so much. But at One America, I had someone who, an advisor, didn't really understand how the product worked so well, and he had sold it to a 35-year-old, and at 36 the guy needed
Mm-hmm.
like a knee, it was like a mild knee surgery, like a torn meniscus. I don't remember if that was it specifically, but it was something, wasn't going to last long. You didn't really need help from someone else, and they wanted to use their policy. And our company was like, okay, everybody, really make sure people know it's got to be two of the six ADLs for 90 days. I mean, this person didn't even really
Mm-hmm.
need a home health aid, but we always want to make sure we're not over promising. What's really interesting, though, is a study was done years ago to determine, when people actually tried to use their policies. To Mike's point, most people waited until they needed help with three of the six
Mm-hmm.
ADLs instead of the two. They could have gotten
Right.
help much sooner. So it's easier to qualify than people think, but you want to go with a quality company. Going with a quality company means not already at the point where you have some kind of diagnosis where the quality company won't take you. So being proactive is the key, I think.
Right. When you mentioned the story about the couple trying to take care of one another, this actually happened to my grandfather about 20 years ago before he passed away. And he played football for Georgia Tech back in the 30s, and he was never a small fella. And that was an issue where my step grandmother really couldn't move him around, and he was fine cognitively, but he just his body was giving out. So they had to have somebody come in and just kind of help with those basic things in the morning. But what this was really getting to, I think, is you mentioned and kind of hinted at the mental health of the other spouse. And I'm intrigued by this feature I saw in one of your slides about caregiver training. And we see quite often that when someone is in a long-term care situation, whether it's home health care or assisted living, that there are times when the spouse just really kind of needs a vacation, because it is a emotional, takes an emotional toll, takes a mental toll, and that spouse is really trying to love that other person, but their batteries get drained, right? So how would that work, in a typical long-term care policy with caregiver training, maybe respite care, something like that, where you might just need a little, somebody to come in for a few weeks at a time.
Respite care to me is a lot more appealing. It's funny, I used to talk a
Mhm.
lot about caregiver training because it sounds good, right? Like, oh, maybe like when my mom was sick, for example, and my mom, when she got real sick was just about 100 pounds. So she wasn't
Yeah.
like your football player. And it was
Mm-hmm.
it was shocking to me how tough it was to get her from her bed to the bathroom. On the hard tile floor, and my terrifying feeling of I'm going to drop her and injure her because I don't know what I'm doing. So in a way, like that's where you're thinking, okay, caregiver training to help somebody figure all that out is a beautiful thing. But what's more beautiful is being able to have the people who actually do it for a living do it instead of you. So there absolutely is caregiver training. So if you say, listen, I want no one else putting their hands on my loved one but me. You can pay for your training through the policy. What I find though is most people prefer to just hire someone to do it so that they can watch the person taking care of they're not exhausted anymore. They can make sure the care is amazing. If they don't like that care provider, they get another one. But everyone needs a break and to not overwhelm themselves. So it's not used all that often. It's nice that it's there because I love options and choices. But Mike, I'm more a big fan of the respite care. So if someone does need a break, and that happens a lot, the policy will pay for someone to be in an assisted living facility. Like with the OneAmerica plan, and this is different for the different plans, but we have a 0-day deductible for home care and a 90-day deductible for facility care. So let's say someone was at home receiving care, but you need a break, you want to go on vacation, you want to go visit the kids. They'll waive the deductible for a facility so that that person could go to assisted living or something for a week or two. And you can use the policy benefits for that. So the plan is very adaptable and moldable based on what you feel you need to make sure you stay healthy as the spouse of a care provider, or if you're the one needing care, to make sure you're not wearing out all the people around you. So all that stuff makes for a nice difference.
Cool. Well, Richelle, thank you very much. I know we're coming up on our 8:40 time here, so really appreciate your presentation today and everything you brought to the table. I just remind everybody, if you have questions about your long-term care plan or how to plan for it, just reach out to Charlie and I. We're happy to help with that. Just a couple of key takeaways. Just looking at your personal financial situation, thinking through what kind of bucket of money would you like to have available to you for your potential long-term care would be a big deal. I think also just communicating with each other ahead of time about your personal preferences for these things is a great idea. And just to make sure you've kind of got that laid out ahead of time so you can move on to other things while you're still very, very healthy. Um, and to Richelle's point, I think, potentially having something in place is probably better than nothing. So it is a good conversation to have. And then, of course, flexibility for, mental health for the other spouse and whatnot is very key. Now, for those who are unmarried or don't have a spouse involved, then it is, I think, crucial to really look at this so that you can have the type of care you might need and not have to rely on those adult children who, like you said, may have grandkids and may not be able to provide everything that you need. But we're happy to help walk y'all through that. Thanks again for joining us today. Our next webinar will be on August the 17th. Watch your email for that. We will have a mid-year portfolio update at that point in time and kind of set the stage for the rest of the year. Thank you, everybody, for joining us. Have a great day.